You might not be able to retire tomorrow. But if you follow the f.i.r.e. or FIRE method, it's possible to retire early. The basic idea behind the FIRE method is that with the right money management and saving strategies, you can retire years before you thought possible, allowing you to spend your golden years doing whatever you want, whether that's traveling the world or spending time with your family or just relaxing at home on the couch. Watch this video till the end to discover how it works. Hello everyone, welcome back to Fascinating Self. Now let's get started. What does FIRE really mean? The acronym FIRE means Financial Independence, Retire Early, and is a term from the book Your Money or Your Life by Vicki Robin and Joe Dominguez, which was first published in 1992. A revised and updated version was released in 2008 and again in 2018. The aim of the book, according to comments by Robin, is not to convey a master plan for early retirement. It is to show people how to live well while consuming less in order to have a more rewarding life while wasting less of the world's resources. Or, as Robin put it, if you live for having it all, what you have is never enough. The FIRE retirement movement takes direct aim at the conventional retirement age of 65 and the industry that has grown up to encourage people to plan for it. By dedicating a majority of their income to savings, followers of the FIRE movement hope to be able to quit their jobs and live solely off small withdrawals from their portfolios decades before they reach 65. Proponents of the extreme saving lifestyle remain in the workforce for several years, saving up to 70% of their yearly income. When their savings reach approximately 30 times their yearly expenses, or roughly $1 million, they may quit their day jobs or retire from work altogether. To cover their living expenses after retiring at a young age, FIRE devotees make small withdrawals from their savings, typically around 3% to 4% of the balance yearly. Depending on the size of their savings and their desired lifestyle, this requires extreme diligence to monitor expenses, as well as dedication to the maintenance and reallocation of their investments. Now, for whom really is FIRE? Most people think that FIRE is meant for people who can pull in a substantial income, generally in the six figures. And indeed, if your goal is to retire in your 30s or 40s, that probably is the case. However, there is plenty for everyone to learn from the principles of the movement that can help people save for their own retirement and even achieve an early one, if not quite as early as 40. And remember, the first part of FIRE stands for financial independence. Something that, if achieved, can allow you to, instead of retiring, work at something you love rather than something you have to do. It is important for everyone to plan for their retirement. But in order to achieve a FIRE retirement, you have to maximize your income while minimizing your expenses. Retiring by 40 requires you to go extremes to succeed. But everyone can benefit from making and sticking to a budget while doing all they can to earn as much money as possible, whether it's by getting a better job, adding a second one, or creating additional revenue streams through sideline businesses or owning rental property. No one can achieve a secure retirement without investing in their retirement savings. FIRE adherents invest larger portions of their income than the average person will want to. But the principle of setting aside a set percentage of your income every month for investment and starting to do that as early as possible will allow you to grow your retirement savings to a point where they can assure you financial stability in your later years. Within the FIRE movement are several variations. Fat FIRE is a more easygoing attempt to save more while giving up less. Lean FIRE requires devotion to minimalist living. Barista FIRE is for those who want to quit the 9-to-5 rat race and are willing to cut back their spending while working only part-time to do so. Naturally, more traditional financial advisors have been willing to jump in with their own variations on a FIRE retirement goal and how to achieve it. One strategy requires a FIRE investor to include international stocks and bonds in their portfolio, potentially increasing their success rate by 20%. Now, is it possible to retire in your 40s? The answer is yes. But it's not easy to get to that point. You need to be incredibly disciplined and make big sacrifices while you are young. It also helps to have a well-paid job. Retiring early requires some luck too. The FIRE movement's rise in popularity coincided with a sustained bull run on the stock market, which has boosted the investment of FIRE fans. If big sacrifices don't appeal, you may prefer a lower level of FIRE saving while living a more normal lifestyle. After all, the basic principles of the movement, save and invest, make good financial sense. It's always a good idea to have a retirement plan so you can check that you're on target to meet your goal. You should regularly review your plan in case the circumstances have changed. In practical terms, how much do you need to retire at age 40? You need to calculate how much you will probably need to spend each year once you retire, which will give you an idea of how much income you will need. Here are different FIRE scenarios. Take somebody who earns $70,000 a year with zero saved for retirement. If this person wanted to pursue a FIRE strategy, they could save 10% of their income or $7,000 a year. Applying the 25 times rule, they would need to save around $1.58 million. Given these assumptions, plus an 8% annual return, it would take this person about 37 years to reach financial freedom. Here's another scenario. A person who earns an annual income of $70,000 with zero saved. But in this case, the person is pursuing FIRE by saving 30% of their income. Assuming the same 8% return, it would take them about 22 years to save the same 25 times amount to reach financial independence. The more you save, the sooner you'll reach financial independence. If you budget wisely and choose to save 50% of your income under the same scenario, you'd hit financial independence in about 14 years. Of course, as we've said, there are many ways to increase your annual income, and we've talked about them in several other videos on this channel. We invite you to check them out. And don't forget that there are many ways to increase your investment by at least 8% each year. Now, that's a lot of leverage to help you reach your goal sooner rather than later. What are the steps to retiring early? Number 1, save. As we've mentioned earlier, most FIRE savers put aside 30 to 50% of their income every month. In order to save this level of money, you might need to identify essential expenditures and make some lifestyle changes. You might want to try out these money-saving tricks. The 3 factors that go into financial independence include your savings rate, investment returns, and withdrawal rate. But how does that work? First, determine what percentage of your income you can save. Savings can and should include all retirement contributions, any employee matching contributions, and money set aside outside of retirement accounts in a taxable brokerage account. Second, take the portion of your current income you spend and multiply that number by 25. For example, someone who spends $50,000 a year would need to accumulate 25 times this amount or $1.25 million to achieve FIRE. Finally, calculate how long it will take you to accumulate your FIRE number based on the amount you save each year. This will require you to make an assumption about investment returns. The higher the rate of return, the faster you achieve FIRE. You can use this calculator to try for yourself. Number 2, invest. If you left your money in a poorly performing savings account, it will be eroded by inflation. You need to invest it instead to give your savings the best chance of growing. Most FIRE savers invest in low-cost tracker funds which mimic the performance of a stock market. You should use stocks and shares to shelter your investment returns from the taxman. Number 3, earn more. The third tip is to earn more. It's not all about saving. The next step would be to try and boost your income. This could include taking a part-time job or extra consultancy hours, asking for a pay rise, changing jobs with a better salary, and starting a side hustle. Number 4, spend wisely. The fourth tip is to spend wisely. Think carefully before buying anything. Many FIRE savers avoid luxury items and save money in any way they can. That might mean stopping that takeaway coffee habit and avoiding Pret sandwiches. You could use the money you save to pay off your mortgage quicker or invest more money. Why not give these money savings tricks a whirl? Now, let's talk about the risks of FIRE. Some critics argue that the FIRE concept carries big risks. Saving 25 times yearly expenses is based on the traditional 8% rule, which is considered a safe withdrawal rate for a 30-year retirement. An individual retiring at age 40 rather than the expected retirement age of 65 could easily outlive their savings. Some individuals pursuing FIRE try to mitigate this risk by investing in passive income streams like rental properties to help boost their annual cash flow. Others choose income-producing activities that are meaningful to them, such as running profitable blogs or starting businesses built on their passions. While wanting to retire at 30 is unrealistic for most Americans, the general principle of financial independence is something everyone should be striving for. So folks, this is the end of the video. Let us know in the comments if you want us to make more videos like this. Don't forget to like and share this video if you like it. See you in the next video.